Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. I didn't feel much like being amusing and doing a poem today. I want to start out the show by saying that there are no really words that I can use to express the anguish about the shootings at the high school in Parkland, Florida. My heart just cries for those victims and for those families. None of us should ever have to feel what they're feeling right now. So I wanted to start out by saying that. So the stock market roared back this week. Any downside that we saw in the market this week was met with immediate buying. It was almost like the switch that had got flipped, where we had all that selling, then got flipped back, and the buying was just enormous and really nonstop. We had 5 straight up days going on, and started with a big reversal last Friday. And as I was doing the show, I talked about the potential for a big bounce when I was doing the short-term view, and then as soon as I got done recording, the market exploded back and just about hit my targets before the market even closed. This was a giant rebound in the stock market. Things like this we don't often see. S&P 500 from low to high, Friday's low to the high that we saw on this Friday, so in just about 5 days and 5 hours, it was 220 points. That's an enormous rebound, well over 5%. Dow Jones Industrial Average from that Friday low to this Friday's high, 2,000 points plus in a rebound. Absolutely enormous. That's the reason why implied volatilities didn't get back down to the extreme low numbers that we have seen in the past. Still, we're quite a ways from the highs for the stock market, even after this huge bungee jump where we saw the market plunge and then come back. In 3 weeks, we saw from Friday to Fridays a buying panic, a selling panic, and then another buying panic, with the selling panic getting the VIX up to 50. And then trading down to about 18 here on this Friday. Well, next in the rotation would be a selling panic, it seems. But that may still be some time away as the buyers have gotten a little more confident. And so we could guess that we could see a lot more chop coming into the market. Help came on Friday, which got the last surge to the upside, which saw the S&P 500 get up 20 points, when the Commerce Department came out and had suggested that there should be very large tariffs on steel imports, steel and materials, and that drove the steel stocks and material stocks sharply to the upside. We'll talk about that in the best for the week. And that really led this last move to the upside. But then news came out right after that that Mueller and his investigation had indicted 13 Russian nationals and 3 Russian companies for hacking into the U.S. election. And the markets got nervous about that. They didn't really know what that meant about what Americans were involved. And now it appears that the Russian, whoever this group was just messing with the election and doing things to benefit Trump or against President Trump. And that was more what their motive was. And there are no U.S. Americans involved. And they say that any Americans that were involved did it unwittingly. So the market did pull back on that news and then began to chop. And it was after that monstrous rebound, ready to give up some ground. So that's why we saw the weakness come in late in the day on Friday. And still, as I record this now, just with about 2 hours to go in the trading session, the market is waffling now just around at a little bit to the plus side. We might see that change again before in these next 2 hours, because the market is moving pretty quickly right now. So we do believe that what we're seeing in here, the nature of this market over these last few weeks, is the nature of a market that is topping and that is in a process of correction. We saw the correction get down about 10% and then had this big rebound, and we strongly believe that between now and the springtime that it is going to have some more significant waves to the downside. We did a big picture analysis. You can see a snippet of that on our YouTube channel if you want to go look at that, where I talk about the Dow Jones Industrial Average patterns. Then for our members, there's a big picture analysis on the stock market that you can see that I go back and look historically at times similar to this, and found 4 times in the last 60 years that we saw this, that actually did start some pretty good declines in the stock market. So you're going to want to go watch those videos. Not a member, become an askSlim member, and make sure that you follow us on Twitter and become a YouTube subscriber. And you'll get a lot of the great stuff that we put out pretty much on a daily basis. Let's take a look at our 60-minute chart of the S&P 500, where we look at what happened during the overnight sessions and during the day, and take a look at what did influence the markets this week. So here is your news that you can see in here, and if you look all the way on the left, the gray area there is the overnight on Sunday. See that big bar way over there on the left? That's that big recovery that we had last Friday, as the market just absolutely exploded for some 80 points late in the day. It was just enormous. And then on Friday, futures overnight, on Sunday night, they extended that move that we saw on Friday pretty strong. Dollar had a big dip, and it brought the metals up. Silver gained 40 cents on Monday, and gold $11. So it was a good push in there on the upside, and that helped the market continue to the upside. After that big move on Friday over here, the Dow actually got up 575 points on Monday, and then it stalled and gave up ground, but it still ended 410 to the upside. That was really strong. Here overnight on Tuesday, the yen had a pop. Dollar fell pretty hard at that point, and Asian stocks don't like that when the yen pops, because that essentially means that the Asian products will be more expensive to the U.S. buyers. So they tend to not like that. We got some pullback in here, but as you can see on Tuesday, buyers came right back in. That really happened every single day, as you saw right in here on Wednesday and on Thursday, and this half the day on Friday, the buyers just kept coming in. So this was a week where it was pretty much nonstop. Inflation news came out and bothered the market. This is one of those dips I'm talking about. As a matter of fact, the S&P 500 fell 48 points when the news came out that the CPI was up 0.5%, and it just brought buyers in like crazy. Silver and gold stalled on that news. They didn't move, and then all of a sudden they took off in a huge way, and we saw big moves on the upside. And the S&P 500 rebounded 65 points off of this low, just as buyers just love the fact that they were now buying golds and material stocks and things like that, so they found another reason to move the stocks up. Bonds fell 1 point again at that point. I'll show you that I think we're going to be making a bottom in the bond market. Here we had some news that Cisco beat after the close on Wednesday. That helped the market be strong and drive the NASDAQ up. But then the PPI came out up 0.4%. That was pretty much in line. And then the market started to give some ground in here. But then the news had come out that Apple they had their share that Buffett held increased, and that led the NASDAQ up. The NASDAQ rallies 115 points, led by a 5.5-point move in Apple on iPhone X selling okay in China. They gain a share there, and between that news on iPhone X and Buffett increasing his holdings in Apple, it drove the NASDAQ up very strongly, and you can see that right in there. Overnight here, they were still firm on Friday. Housing starts jumped on real strong demand for rentals, up some 9%, and import prices surged 1%. So there's another one of those inflation boogeymans coming in and knocking the market down over there. And the market was doing fine until the news came out about the Russian indictments, and there, of course, some fear about what that meant about the Trump campaign, and pretty much sure, based on everything I'm hearing, that is not going to be an issue for them, and that's probably going to be celebrated by the Trump administration, unless some more news comes out in here that we don't know. Anyway, the markets seem very ready to give up some of those gains, and here late on Friday, we'll call it getting a little bit softer than we've seen it this week. Stock market for the week was up over 5%, now at this point up just over 4%. As far as the S&P 500 and the Dow Jones Industrial Average go, NASDAQ stronger, up about 6% on the week, and the Russell, the laggard, but still up a giant 4% on the week. Usually when the Russell is the laggard, it means that they're not buying second and third tier. They're mostly moving into the widely held, and that is the connection to the indexes, essentially, because the big indexes are so jam-packed with widely held stocks. So that's why the Russell here is underperforming, and it's probably a sign that at some point in here, these indexes are going to get tired and give up some of this ground that they've made on the upside. We do expect that. We'll make sure you stick around for a short-term view. We'll talk more about that. Bond market, a choppy week, and the small gains in the 30-year that we saw are not exactly reflected by the 10-year. 10-year is softer, and the 10-year yield up about 4 basis points on the week still. It had a big 7 basis point surge on Wednesday. And that's why we're still holding with interest rates gaining in here. So if we had the interest rates gaining on the 10-year and we had the 30-year moving up, so the 30-year lost, interest rates went down a touch, you can see that we still have that, flattening of the yield curve that we've been seeing all along. The dollar got weak again. As a matter of fact, it made a new low in here, and we have believed that it was in a bottoming process, and we still think that is going on, and potentially a couple more weeks to go. I'm going to show you why that I think there's maybe a couple more weeks of chop in this area before the dollar is actually able to get some footing and then move to the upside. And we do think the dollar is going to get a temporary bounce over the next month or two, so that we think is coming. Gold market, gold strong as the dollar is weak, of course, and gold gains about $32 on the week. Silver also gains strongly, about 40 cents on the week. And the oil market rebounds. It had that really big downside week the week before. This time it gains back $2.70, and we're not really liking it here. We think that it doesn't have much upside at all, and maybe even that we've seen the best are the highest prices for oil that we're going to see this whole year. That's it for the opening, and we'll be right back with our best and worst stocks for the week. All right, best stocks of the week. We do this every week. We look at the big movers that we have for the week in stocks that are in my universe. I have an analytical universe of over 300 stocks, mostly the widely held, high and mid caps, and then we also look at the majority of the major ETFs plus a lot of futures and futures ETFs. So I do analysis and look at about 400 different symbols every single week. And then the most widely held and the ETFs and the futures that we call our focus list, we do analysis that we share all of our cycle analysis with our level 4 members, and they actually get my charts on their Thinkorswim platform. TD Ameritrade, our preferred broker, Thinkorswim, the platform. And if you would like to get my charts that you're going to see right here, a lot of them, and of course get the support from me that they get on a lot of trader issues, become a level 4 member and you'll be able to get all those. That's amazing amount of information that you're going to get, which includes all of our rankings and setups on all of these symbols, and of course all of our videos, the whole library. So you can get that. All you have to do is write slim at askSlim.com, and I'll send you a special half price trial link for 1 month. You'll get everything, and you'll be amazed at how much you learn. Also, if you love this cycle analysis and what you're seeing, you can learn even more about it by taking our workshop, which is going to be available in April. And all you have to do is go to, we're going to have a special pricing at a pre-launch, and all you have to do is go to our web page, the front page to the bottom at Slim at askSlim, and click on Cycle Analysis Workshop, Cycle Workshop, and you'll just be put on a list then by filling it out, and then we'll notify you when you can sign up for that. So that'll be a discount. This is a premium workshop that we're putting together with 21 videos. It's going to be 13-14 hours of viewing, and massively comprehensive with so many different studies that I look at, with of course an overlay of cycle analysis. You will come out of this with an amazing knowledge of cycle analysis, technical analysis, and how you get market awareness that's just way better than you would have expected you would have gotten before. So sign up for that, and send for our special link for our level 4 memberships. All right, so let's take a look as we get into our best for the week. The best stock for the week that we looked at in our group is Under Armour, UAA, and I'm going to switch over to my Under Armour notes and put this up for you. So our analysis normally does is look at weekly and at daily charts, and our subscribers get both with all my analysis on it. This is a side-by-side view of the weekly on the left and the daily on the right, and I'm going to pull up the weekly because that's going to be mostly our focus here on this analysis. So I'll blow this up for you to see on the weekly in UAA, and there is Under Armour. It's so clear when you look at that, right, that there was a massive decline as it moves from 48 all the way down to 11. And for just a brief lesson on cycle analysis here, you can see that on the bottom there are cycle brackets, and those cycle brackets are meant to be guides to help us find the areas of lows. Now, cycles are measured from low to low. So this is a cyclical bottom over here, and this is a cyclical bottom over here. And the distance between those two bottoms is similar to the distance between those bottoms. That's a little oddball cycle there, and then you can see it comes right into line over here again. And now, as I blow this up, you will see that we are in rallying in Under Armour, as it has this giant 27% week on the upside. That's getting into the resistance zone. So generally what we look at is that when you get into these final stages right in here, is that you get a corrective period. But when you hold up through most of the cycle, it gives you a bullish pattern that's built. When you get this big decline and then you get this bullish pattern that we have built in here, that's a strong base. And what that says is that it's likely that you're going to get a little pullback here in the next, we'll call it 2 or 3 weeks. And then once it gets into that support zone, it's a buy. That would be somewhere around under 1610 or so, or around that area. And that to me would be a strong buy, because the patterns are suggestive now that instead of being in a downward stair-step pattern here, you're now designing or building an upward stair-step pattern here. That's what makes this a buy area, and that's the kind of work that we do, is identifying the highest quality entry or exit zones based on this type of work. And generally, you will see a resistance zone like you see here. That is the point where it's going to stall. Great base built. Earnings came in line, but their revenues are really strong, and the analysts like the fact that they're going to be doing some restructuring. So that's a kind of a little lesson and a look at what we do here. Take a look at CNX. This is a coal stock. I like this pattern a lot. And as a matter of fact, this stock, there's not a lot of coal stocks to buy, and this is on our list for the best for 2018. Again, you could see this avoided breaking down below this level. That is a good thing. And then turned up. So it's in week 1 of this cycle rising. There's a little area of the 100% fib extension and the 61.8 fib retracement. What that means is that we're early in this advance, like 1 week. It's very likely that it's going to get up over this level, 1610. It's now 1488. I think if you get a pullback, you buy it. There was no news in here whatsoever this week, but something up when you get a great pattern like this and you get an 18% gain in console resources. So like that one. Chipotle CMG, I'm starting to like this one too. This one was, of course, in bad shape, and they had lots of issues with health problems in their food, people getting sick. And this really looks like the decline is over with. This looks like a big V reversal that formed right at that cycle low timing. It's in a little resistance zone, but we think the next stop is really here about 345 at this other cycle peak there. So it's 300 right now. I hope we get a little pullback this week from this little resistance zone, because I think it's in much better shape. They poached the CEO from Taco Bell, and that looks really strong to me. When you look at here at the daily patterns, you can see an island that formed, and we have that marked off. How is that an island? Well, the island is the big gap down and then the big gap up. You can see that, and that gap up came on nice rising volume right over there. Now, this stock is still negative momentum. We have our momentum indicator here, the slim ribbon on the daily chart. So it's got a little bit of work to do here, but that island is bullish. Note in here the cyclical patterns, the declining pattern and the rising pattern. Declining and the rising, and this rising pattern begins with an island. That is a super bullish occurrence, and we believe that there is a lot more upside to this Chipotle move. Applied Material, AMAT, is the next one we're going to look at, and you can see in here it gets through that daily resistance, which is pretty significant. Now, when you look at this chart, we actually have 2 patterns in here, and what that means is that we're reviewing. Now, this stock gets a 13% gain on the week on earnings being strong. They beat on earnings. This, to me, is a worrisome pattern in here, because the low is really due over here, but then we got a lower low over here. So to me, that either means because this extended so long that there's a lot of sellers out there, and either this rally is the peak and it comes down in here, or this rally will stall pretty soon and roll over and come down over here. Either way, it's suggestive of the fact that that Applied Materials is likely to run into some trouble in here and not be able to make a lot more ground past this 55, 57 area. So it's now trading at 55. It's on my list of best for the year, but right now it looks to me like it's got a lot more work to do. And you can see these blue areas are our notes to our subscribers, so that tell them what we have done on here and why we have the projections that we do. TripAdvisor, TRIP, the stocks on the online travel agents, that's what I like, travel services, they seem to have different things going on. I've liked TripAdvisors, I've liked their service, but it's been negative. And here again, you can see what we call a negatively configured cycle. When you get a negatively configured cycle like that, the odds are high that it's going to bounce only to the resistance, 1/3 to 2/3 of the way back, and then fail and then make another low. You can see it did the same thing over here and failed to another low. But look, it's now taken out this high, and that says to me a strong base is being built in here. Now, this likely corrects from that level out over here until April, but this stock is probably going to be a buy. And you will note that if it does what I believe it's going to do, that it will have made an inverted head and shoulders. Inverted head and shoulders are made by cycles. That's why they occur, and you'll learn a lot more about that in the cycle workshop also. So TripAdvisor stalling from the area we think it should. Their earnings missed, but the nature of their business has switched some, so that their non-hotel business is much stronger, and they gave a very strong outlook based on that. So we don't see a lot of downside in here at TripAdvisor. It's a nice pattern. Now, I mentioned earlier in the show, in the first segment, of the fact about the steel imports, the suggestion that there would be tariffs on foreign steel imports. Look what happened in here. U.S. Steel, when I first got this ready to report to you, was up 13% on the week. It's now up 23% on the week as it gets this giant gain on Friday. It had strong analyst comments during the week. And we have strong gains. Nucor up 10%, Steel Dynamics up 13%, AK Steel up 23%. Even Cliffs, which is a material stock, jumps also strongly. And we have a good firming going on in the copper market. Also, this is 2 weeks into this advance. It's not likely that you're going to get a top. That happens rarely in the second week off of this cycle low that you can see right over here. So my guess would be if it got some pullback, it would still fight its way back up here to about 45. And then we think it's going to have a harder time later in the year, as you could see our projection in there. And the truth is that I don't actually think that they can get that they'll be able to hold on to imposing any kind of tariffs like that. You're starting a trade war, essentially, if you do that, and the markets are going to hate that if we have a trade war. Don't forget, Smoot-Hawley back in 1930, I think it was, is what really exacerbated the crash and the depression back then. So trade wars are bad, and tariffs are bad, and they manipulate markets, and free markets are much better and much better for people. It's better that we get cheaper steel, isn't it, and save money as consumers. That makes sense to me. So I have some doubts about that, and that's why I have some doubts about these steel companies being able to continue on the upside as they are right now. So big upside week based on some favorable analyst comments and these potential tariffs, but we'll see where that goes to. Next thing, we're going to look at Square. Square is on my list of riskiest stocks for this year. It gets a pretty good bounce, though, this week. Up about 12% on the week as analysts upgrade it. It's in a very tough spot. And our cycle analysis suggests that this stock is going to go down again. Now, you could see our projection in there as this, let me get a little closer in here for you to see, that what happened here is that this cycle corrective period brought you a pretty good decline. You see, it came into the support zone. You can see the 34-week moving average coming into that zone also. And then it rallied, but then it failed at the 78.6% and gave up most of the gain. When it does that, generally it means there's sellers out there. It takes a lot of energy to get it back up here again, and then you end up getting into this corrective period. So we think that the odds are very high that Square is going to give up these gains, and it's in a pretty tough spot. Baidu is the next one we're going to look at, BIDU. This is a Chinese e-commerce company. This is a very bad pattern. Well, you could see it rallied from the support zone. What makes it bad is that, look right in here. See the positive cycle? The positive cycle looks great, right? A giant positive cycle in here. It rallies, doesn't make a new high, then it takes out this cyclical low right over here. That is super bearish. This is just simply a relief bounce in here. And the odds are very high we're going to see this thing move down to about 208 or worse again. I do not like this whatsoever, and I think that when the Chinese market starts giving ground again, or equity markets, this is going to give ground fast. Earnings were good, and analysts have upgraded this stock, but I'm going to give it a big no when you look at that. One more stock we're going to look at here in the best of the week, as they also reported big earnings, was Cisco, CSCO. And this has our colored phasing in it generally. The green area you could see is the rising, the yellow is corrective, and if it turns red, it's a negative area. You only had one negative period in there right there, and that of course lasts right into where the bottoming period is due, and then it turns up. Here, this is what we call an extreme right-hand translation. What that means is that way here on the right side of this cycle is where it finally had a correction and then powers its way back up. See how that is exactly how it resolved itself? And now what it looks like is only the second week of this advance. Cycles like this do not end on the second week. That's really first week. Our upside projection is to this 78.6% fib extension at around 48. You get a pullback in this one, I would buy it. I think it's very highly probable that we're going to see more on the upside in Cisco, as they have this absolutely huge bullish pattern that we see in there. That's the best stocks for the week, and we're going to get to the worst. Not a lot to show you in the worst of the week, as we had this big upside week in the stock market. I only have 4 stocks to talk about at all. There was hardly any in my entire list that were down very much for the week. We did see this big decline in oil 2 weeks ago and a rebound this last week. And surprisingly, oil stocks have not been able to put on a lot on the upside at all after that really tough week, the previous week that they had. As a matter of fact, Diamond Offshore got an analyst downgrade and then moved to the downside. This is a beautiful chart in being able to describe to you the cyclical analysis that I do and the colored phasing that we put into some of these charts for illustration. And that is, when a stock gets breaks a previous cycle low, it then gets into a period of correction, we color it red then, and then you get an idea that it moves down through the bottom of that cyclical period. So when it broke underneath this low right over here, it showed this rally ended and then would likely decline through this period. You could see it did that exactly. When it broke under this cycle low right there, it rallied, you see that, and then fell all the way through that period right there. Note how the formations are almost identical right in here. Now here's what it did. It rallied very strongly and then broke down right in here, and this looks like it declines out until May. That's interesting because May is the date that we think that the U.S. stock market correction will be completed. Yeah, the one we're in now that doesn't look like it is even correcting at all as the market storms up. But this is a bad pattern on this cycle break, and Diamond Offshore we rate as bearish and a sell if it tries to pick its head up at all. So that's DO is the one we're looking at there. The next stock we're going to look at is Biogen IDEC, BIIB. This is a biotech company, and they had been doing well based on an Alzheimer's drug, and then there was some negative comments about efficacy on that. They lose 7% on the week, and here you could see a very bad breakdown. This one projects to a decline coming out into April, and that's what we have forecast in there, because those two blue, what we call timing spikes right over here, are pointing to that April period. So this rally right in here dies, and then it rolls over. It breaks the last cycle low here, and that essentially is negative out here till April. If this gets a pop in here, it is a highly likely sell that it would then turn down and move again. You can see right in here where this cycle turned over right there. It didn't even actually turn negative, but gave a big warning, and then it popped and then fell right into that timing period right over there. So that's typically what happens, and why we look for stocks like this to be on the short side of, because momentum usually carries pretty significantly on the downside. Next one we're going to look at in this category is Navistar, NAV. And this is in the truck engine business. It used to be a farming business company. Now, this is a bad pattern. Also, analysts, it seems like analysts came out and just covered this one this week at neutral and didn't have any positive comments to say about it, and gives up 5% on the week. Here you could see that cycle trough right over there, and violating that would be negative. Now, when you get a pattern like this, it suggests a major top. Here you have a rally and a decline, and then a rally to higher highs and giving up 100% of the move. Then what happens when you get into a rising phase? It rallies, but it doesn't get up to the old high, and it rolls over. There you can see the cycles constructing your head and shoulders top. I don't really like to project formations like that, but I just want to give you an idea how cyclical patterns create the formations. And M tops, W tops, flags, all of them, they're all done by cycle patterns of multiple time frames. So this rally doesn't quite get up to our target zone, and there rolls over, gives up 100% of the gain. When it does that, it's very likely that that is a major top in Navistar. The last one in the worst of the week is Endeavor, which is the old Tesoro, ANDV. They changed their name and changed the company a little bit because they want to be more than just the refining company that they were. And you can see in here the analysis and the projection that we have. So this red area you see right there is the resistance zone. And you'll note that we have it projected to come down for maybe another week or two and then have a big bounce. Now, where does that come from? Well, that comes from the fact that this cycle, which rallied through this period right in here and is selling off right in here, is then setting up for a bottom and then turning up. The probability is very strong of getting into that lower resistance zone right over there, which is at around 105. You should be able to buy it at around 95 in here, and that's your 10-point bounce coming. Now, this is an example of a stock that broke down. It got underneath this significant low, broke the 34-week moving average. So the 34-week moving average extending out right around over here. The odds are very strong it's going to test that level. So right in here at that major 61.8 and this cycle bottom level that supports is the area that we'd like to buy it. Let's call it 93 to 94, and then moving up in here and catching hopefully a 10-point move to the upside. So this is a stock that's in the worst of the week. And I don't get part of it is because the analysts, quite a number of them, have upgraded this stock this week, and it's really at a good spot in here. So I think it's a high quality shot. And I say shot because we are looking at buying a stock that's falling very hard and a shot for a rebound. And if you believe in being a contrarian investor, this is one of those that is setting up for a pretty good location. So that's what we're trying to do, is look for those high quality entries, and I think we'll call it the next 2 or 3 weeks that we think the bottom is going to form in there, and this one could easily be on your list of stocks that you would like to buy. So that's Endeavor, the old Tesoro, the refining and more company. We're going to be right back with our short-term view for the coming week. All right, short-term view for the coming week. We're going to look at daily charts because we're looking only at short-term. And we take an accounting of how we did in the previous week, kind of review what we said. This was a really pretty good week. We'll call it about 75 to 85% correct. Mostly the momentum that we were looking at held up. There were some things that momentum, like in the euro currency, neutralized and then got positive again. So it never really reversed in momentum. The dollar the other way, it kind of neutralized and got negative again. And the stock market, interestingly, with this giant jump, did not go to positive momentum. It had turned negative, and it's still negative momentum, which leads us to believe that this short-term overbought stock market is probably not going to be able to hold up. So we're going to switch over now to our daily charts as we look at 2-year daily charts, because it gives us a little better alignment, and then we'll just come in a little closer for you to see. So we're going to start out by looking at the light crude market. We thought that the light crude market would bounce, and we thought that the bounce would get up to about 62 and then fail. Actually, the bounce got up to 61.84. Because it came a little bit later in the week than we expected, it didn't get to roll over yet, but it acted pretty much as we expected. So it got the bounce in, it just wasn't, just missed by a few cents to where our target was. So we're in a situation right now where it's a high probability it will pull back. There's 3 things I'm going to look at to tell you that. Number 1, we're in a negative momentum condition per the slim ribbon. Number 2, we're in a negative momentum condition with the projection oscillator overbought. The probabilities of a pullback under that condition are very high. And number 3, it's at minor resistance right there. So we're going to look for a pullback and a small down week in here. Because of this bigger cycle right in here, it's not likely to get a big break. It would be more kind of an erosion in here and then try it again out a couple weeks from now. So we're going to look for a small down week in the oil market. But those are the 3 components that tell you that when we look at that we think it's going to get a pullback. As far as the dollar goes, DXY, we'll look at the dollar and the euro. The dollar made a little lower low in here from this other low. Now, the intermediate low that we were looking for had come a little early, and that was suggestive of the fact that it was strong, but then it came back and took out this low, which says to us that we're just getting warned on the price level. In other words, this area here, just above 88, is likely the area it's going to hold. We expect that it's going to get up into this area here on a bounce, but we think that the euro and the dollar this week are going to be in ranges. In other words, the dollar probably move up and then move down again. It suggests that we're not going to really see a strong intermediate low for about 2 more weeks based on what we're looking at in here. Now, we wanted to be short the euro, and it got a little bit through our shorting zone as it got a little stronger than we expected. But overall, this action was right. We thought that the dollar would have a small down week and then in a couple of weeks start to move up again, and we still hold to that now. But we think this week is going to be kind of a choppy week. We're looking for a dollar range in the area of 89.40 on the upside, 88.25 on the downside right in there, and we think it's going to kind of get stuck in there right now. If anything, I think it does better here and then, does something like that. But I pretty much am thinking more range bound here for the dollar as it starts to pound out a intermediate bottom. We'll look at the euro currency right here, and we had a shorting zone right up here. And it got through it and then hit that cycle peak and then just turned south. So it ends up that we were a little early on the area that we wanted to short it, but you can see that it's turning down pretty good. Now again, we're looking range bound in here when we look at the euro currency. 123.65.70 on the bottom of this minor support, and this area up right over here about 125.70 or 80 right up there. That's kind of the area that we think it's going to be in. If we said the dollar would have a little bit of a rally, right? And then turn down again. So I just drew that opposite because the euro is opposite. That's kind of what we're expecting in here for the euro currency. Dollar euro currency, we're just going to expect those ranges, but it did pretty much as we expected for the week, just that the euro was a little stronger and the dollar was a little bit weaker than the areas that we thought they would be. Gold market, we said choppy week and then resolved to the upside is what we expected. It was a little bit stronger than that. It chopped early in the week right in here and then took off on Wednesday is what happened as the dollar got weak in there. And then it started to roll over in here. So this is a better picture than we really had seen. You see where we have this note here? early low that is price levels established that hit exactly to the head and shoulders number that we expected down here around 1308. Just incredible, right? It's the distance from the top of the head to the neckline and the distance from the breakdown of the neckline to that rising neckline parallel right there. 1308, it makes a low of 1308, which is just incredible. And then it makes an early low in here and then moves up. That's a much stronger picture. Now, remember, we said the dollar, and we think it's going to be range bound at the moment. Well, generally because gold and the dollar trade inversely to each other, we also think it's going to be a tight range for gold also. At the moment, we're looking at 1370 as the top of that range. We're looking at this buy zone in here in gold at around, we'll call that 1337 right over there as the bottom of that range. And that's where we think the tight range is going to be, but we favor the long side in here over this period because I really think it's more that if it gets there, it's a buy and it'll trade back up again. So that's why we have that minor support listed as a buy zone. Also, this early low that occurred right here usually only happens when this rally is, the energy from that rising cycle is very powerful. So that says that minor area there is likely to be a good support and likely to be a reason to buy it on the long side. Now, this is an example of where you have the upward momentum, the slim ribbon positive in here, and it rallies from 1280 all the way up to 1370 on that positive momentum. And then see that little blue arrow right there? That's where it went neutral, and these bars went gray. Then all of a sudden it turned positive again right over here. So sometimes you get a little slim ribbon chop right there and it becomes neutral, and then if it goes back in the direction it was, it tells you the strength or weakness, and that tells you that it's pretty strong. So this is a little different picture because what we see is that, remember we mentioned that when light crude is overbought in the projection oscillator, but the slim ribbon was negative and you were at a resistance zone. That was a sale. In this case, when the projection oscillator comes down in here and you have a positive slim ribbon in the support zone, that's a buy. So we're just going to watch this thing come down in here. It could come down without gold coming down a lot, and that's signaling the buy point, and hopefully it'll be right there in the slim ribbon and that minor support buy zone right there. So it's a positive scenario that we're looking at there. We're just going to call it a tight range with a positive slant. How do you like that one? Let's look at the bond market, /ZN. And you can see in this bond market where we're looking at the 10-year, our 10-year bond on the weekly chart is in a bottoming area. So is the daily chart. And you can see that's why we have this upward projection in here. Now, what we said for the bonds was they were likely to chop around, move a little bit lower, and then turn upward. And so we're getting that upward turn, but it's not very significant yet. So following the pattern nicely, and now the upward turn likely to come in this next week. We're going to look for the 10 years to get up here. This is 2110. That would be our target for the coming week. At the bottom of that minor resistance zone. It's still declining because we don't really have a confirmed bottom in there yet. And when I look at the 30-year right here, you can see the same picture. There's a morning star that occurred right there. Our option bias indicator is giving a overbought signal, extreme oversold signal. At the same time, it's making the morning star. At the same time, we have cycle bottoms. Those are all pointing to advances, and we're looking for a move to the upside in this week into these resistance zones with 145.30 being the top of this minor resistance zone. And we could even get into this short-term resistance zone there over the 146.10 area. So we're looking for an upside week getting into those resistance zones. And then starting to set this bottom we're looking at. If I have the projection right, we probably get up in here, roll over, not make a new low, and then this is better out here in March. for the upside move. So kind of chop in that area and then move up there strongly in March. It's a little longer look, not exactly a short-term view. So now we're going to look at the stock market. Stock market had this immense move. As I said, when I recorded the show last Friday with a couple hours left to go, it was trading basically on its lows, and I projected the S&Ps to get up in this week to 2630. That would have been like 80-point move, and said, wow, that's a big move, but I believe it's going to happen. And then we get like 220-point move off of the bottom. So it was way bigger than I expected. It got through every resistance zone that we had in there, except coming up now into the 61.8% resistance, and then rejecting some. And the same thing for the NASDAQ, which gets up into the 78%. Wow, that's just a huge move. So here's what we're looking at in here. And for those people that have our charts, you will notice that something is a little different here. And we made a note of what's called a half cycle shift. There's essentially small cycles right in here. And we've had all of these patterns made up of two of those. Now what this one did was add a third one into it and then get this big jump. So this pattern in here, which is the one we're following, gets a half cycle move this way, and now this is the one that we're following right in here. So that's some pretty advanced cycle analysis right there, and some hocus pocus, some of you might think. But it's true, and that's what we really look at to really get our best understandings of the market. So the S&P 500 does what I don't expect. It gets way past. The first number that I had was right over here, and the second number somewhere right over here, and it gets way past those and gets up into the 61.8 and then rejects. You can see that right there. So we're going to call this coming week a down up week. What does that mean? Come down, test this area of support. That number right over there is right around, we'll call it 2703 right there. This is 2665. Those are the targets. You can see the date that we have right in here towards the end of February. We're going to call this a down up week. It just might be down with not a lot of up. And it might not give a lot of ground early. It might just do this. You see something like this and then turn up. So this number right over here that we're looking at, 2703, I think that's very likely. It's only 30 points to the downside, which is not much in this market. And this one over here is only some 70 points on the downside. So I think that is very doable, and we're going to look for a down up week that ends small to the downside for the week. I'm going to show you the VIX, why I think there's a little more enhancement to that analysis. Let's look at the NASDAQ first, as this storms way past anything that I was looking at here. Now note the slim ribbon. You see it curling up right over here, but still red, still negative. That's let's go back to the S&Ps for a second so you could see that. And you could see right in here the slim ribbon curling up but still negative. When that happens at the resistance zone and you get overbought, that is, like we said in light crude, the place where it likely turns down from. So the NASDAQ has got the same situation where we have the projection oscillator overbought. It's come way up to the 78.6% and now rejecting. So again, there's that half cycle shift in there, and we're focusing on this right here, and then the half cycles in the middle. You pull down for part of this week, and then you rally a small down week probably, and then roll over a couple weeks later into this declining phase. So if we put that up on the chart for you to see, we would look for this getting down to the support areas. That looks like 6683 right over there, which is 100 points on the downside, and then rallying and then moving down again. That's looking out about 3 weeks time that we're looking there. We'll call it a small downside week. Now I want to show you the VIX and what supports that, and the VIX patterns have been magnificent. Here you could see that the cyclical pattern suggested that we were going to get a pullback in the VIX right over here. And that was the period of rebound for the stock market. Look what we're getting right now, and that says we're likely to get an upside move. I wouldn't be surprised to see a 25 to 30 VIX again next week, or even higher than that, as the market then starts to pull back and people start to get nervous that, well, the next big down wave is coming. I actually don't think it's time yet for the next big down wave. I actually think that we're going to get more into a choppy situation, and then the next big down wave is some weeks out there. So you can see what we're looking at in the VIX, and that's calling for implied volatilities increasing again in the next week. And we'll just have this, we'll call it a cross rough going on between the bulls and the bears, as the market just changes its mind in some of the most extreme ways we have ever seen. Don't forget, go to my websites and sign up to get that in on that special premium price for our cycle workshop. Follow me on Twitter, become a YouTube subscriber, and if you want to get our charts on your Thinkorswim platform, write slim at askSlim.com so that you can then get our half price on everything that we do, including all of my cycle work, and you will greatly benefit and learn a ton from all of that. That's it for the show this week. Next week is my vacation week. That means there will be no videos, no market week. We still do everything else for our members, so you'll still get all of that, but no videos. I want you to be so careful because, man, it is so crazy out there, and you're like my family out there. So I feel connected to you, and I want you to be careful. And I'm always wishing you great trading.